Hello and welcome to Pro Trader Strategies Market Commentary for Monday, May the 13th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. I'm here to teach you guys some different strategies you can then implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. It is a Monday, so we would expect lighter than normal data, and we basically have just that. No economic data for the most part. We do have Clarita speaking today. She is an FOMC member also. Let's talk about crude oil inventory, or crude oil. Crude oil is slightly higher today. It did pierce above that $63 a barrel area. We're seeing a real flight to safety, and I think that crude oil was a benefactor of equities coming out, money coming out of equities and putting it into safe havens. Oil has a tendency to fit that bill sometimes. I think it got a little bit overdone to the upside. People got a little worried about the overall economic picture, and that crude oil started coming back down, as you can see here, back into the lower 60s, not getting above that Fibonacci area that we've talked about with the $63 a barrel area. So that line in the sand demarcation, we broke above that, but we're seeing it break back down again. Now, you guys have heard me talking about this several times before on these daily market commentaries, that I believe that crude oil is overpriced. We don't want to see crude oil prices move too high. We'd rather see them in the mid 50s, if not lower even. But something to note here, when we were talking about this going above the 63 area, and I've talked about many times, because we have the point of control. We have a point of control here and a point of control down here. One is for time. This is going to be for the time. Let's just do a little clock there. That's for the time, and this is for the volume. This is for the vol. All right, so up here, two separate pocs. Right in between is where we're trading. We could easily see this market start to build in some of this volume down here. I think that that would actually be, this is the area where I would like to see crude oil, because, you know, I talked about the velocity money last week. I think that that is a key factor going forward right now, especially, is trying to keep crude oil prices low so the gasoline or the prices at the pump stay low, and we spend those extra dollars elsewhere, creating velocity of money. All of those levers and pulleys are what really makes a good economy tick. All right, we've got gold futures moving back up. It was above 1,300 for a little bit earlier this morning. You can see it's up almost $11, trading just below that psychological level of 1,300. I'm actually looking for this to settle above 1,300 now, with the equities really falling out of bed. Dow Jones was down about 600 points earlier today. We'll talk a little bit more about that once I start getting into the equities. But one of the catalysts for all of this market tension really is the tariffs that we are raising against China, going from 10% to 25%. Well, they started coming back and saying that they were going to start selling our bonds. I don't think that they're going to sell the bonds. They just have too many of them, and they would lose their shirts on it. But they could stop buying our bonds, which is something we've been relying on since basically 2008 or 9, that they've been buying our bonds. We would not want to see them dump all of those at once, although that would, if they started selling those bonds, remember, the price would go down, interest rates would go up. That might meet the mandate of what the Fed would do, or Fed wants, completely make that yield curve go to normalcy where it's not inverted. So a lot of those things might be what the economy was. We would have to pay a ton of money extra for the higher interest rate. We'd have to pay that higher interest rate on some of those loans. So the government doesn't want to see that. So there's a lot of levers and pulleys going on right now. China also saying that they're going to raise tariffs on us, and that could really make the overall economic outlook very fuzzy. All right. Bonds, as you can see here, up almost a point right now. We are one tick shy of a full point in the bonds. I was fading these moves in the bonds moving higher, but with this turmoil, with China holding the hand as to what interest rates are going to do and what they are going to do, you know, this is a flight to safety. So before that happens, I'm going to let everything start to play out. I think the equities still could have a little bit more correction to the downside with all this turmoil going on. So I'm not going to play any of it, despite the fact that I don't think that they are going to lower interest rates, the 30-day Fed fund futures. So we got Fed fund futures. I don't know why you don't want to work for me, but Fed fund futures have priced in. Now it's a 70% probability, 70% probability of a rate hike in December. So interest rate hike in December. Fed fund futures are putting in that probability. So I don't think they're going to lower rates anytime soon, but if the tariffs go in across the board here in the United States, in China, we could really start seeing this economy slow down. I'm not a big fan of tariffs. They haven't really shown up as a detriment to the economy as of yet, but this is a much bigger increase going forward, and it really could start causing some problems. So these Fed fund futures, like I said, pricing in a 70% probability of an interest rate. Sorry, that's wrong. Interest rates getting lowered, 70% probability of interest rates going down, guys. So that's a big move, right? So 70% probability that interest rates will go down at the December meeting. So keep your eyes out for that. We've still got a few months ahead of us before we have to worry about that. I don't think it's going to happen. Market's pricing it in, though, right now. And that was an increase from last week. It was going from like 60% last week of a interest rates going lower to a 70% this week. All right, Dow Jones Industrial Average down over 600 points right now, right down to the point of control. This is a magnet we've been talking about. As soon as we get back into the value area, which is these two lines here, the market wants to go to this little magnet right here. And this magnet, I don't know if that looks like a magnet or a petri dish that stinks, but the fact of the matter is this is a magnet, and the market wanted to come back down to it. And that's what we're seeing happening right now in these markets across the board. Nasdaq actually was pointing right at it not too long ago before I started turning on the daily market commentary, but you can see it's accelerating to the downside. We've got this 50 Fibonacci right here, which is part of this low volume node, but we've got two. We've got the extension lining up with the 50% Fibonacci there, and that is lining up right at around 72.30, let's call it. I think it's really closer to 28, but I think that's going to be the mark where we go to settle down. It's going to come down and tag that. Again, we've got the points of control right here, a POC and a POC down here. One's for the volume, one's for the time that's been spent, and when it's right in between, we could see it want to back in and forth and build out the volume node here. But 20 or 72.30 is really kind of where we're looking for in the Nasdaq right now. That's the next support level. Now that we've broken through that point of control. All right. The E-mini S&Ps, they've got a little bit more room to the downside. I've been talking about this, that it is more of a psychological level. That 2,800 is going to act as a support, which kind of lines up right in here. We are pretty close to that, only about 13 ticks away. Are we going to get there today? That would be almost 100 points down in the E-mini S&Ps. That would be a pretty cataclysmic crash in terms of E-mini S&P points, but we could easily see it want to go down to that 2,800 I've been talking about now that it broke below this Fibonacci support of 28.33. Remember, we talked about that on Friday. We peeled below it. Settle above was going to be a win for the bulls in a sense, but now we peeled right through that like it was hot butter. It's like a knife going through hot butter. Let's see if I can do my knife. We've got a knife here, and it is cutting through hot butter. We got a butter stick right here, and let's see if I can do my good old-fashioned butter. There we go. So it's getting ready to cut through the butter. So we are looking for 2,800. Now that it's cut through that, the next support level is this. So I think we could easily see that Fibonacci coming down to that 27.25 area. So that's going to be right in line here. The 27.25 is right there where the POC is. That again acts as a magnet, right? So that's what we're looking for there. But right now the market has no downside. No downside support other than that psychological level at 2,800, which is a volume node. That is going to be a magnet that it comes down and tags up. Are we going to get down that extra 75 points? That would be a big correction, but it's not out of the realm right now, the way the overall markets are acting. So just got to keep those lines of demarcation on your radar. All right, let's take a look at the E-mini S&Ps on the daily chart. Each candle here is a 30-minute section. This gray area right here is the overnight. The blue here is the day session. You can see overnight inventory was very short. No attempt whatsoever to flush those guys out. And you can see right on the open, we tried to test that 28.33 Fibonacci area to get back above that, but not a lot of attempt to flush out overnight inventory shorts as all of this tariff information was being disseminated into the market, really. I mean, we knew about it heading into today's session, which is really what all this sell-off was about. And then today just decided to turn those hands around and just keep selling. And that's what we're seeing right now as we are approaching the low, maybe even getting ready to print new lows right now. So market really struggling. We knew all this was going to happen, right? We've talked about this time and time again. Honeywell was one of those trades that I kind of held on to a little bit longer. They were the May 165 puts that I had originally sold for about $1.85, somewhere right around in there. I think it was $1.82. Sorry, $1.82 in there, and I was able to cover those this morning for 87 cents. It wasn't the best trade ever, but I covered those right off the open. Just basically went in and hit the first offer I could as the overall markets were correcting. Remember, I was short the 165 puts in there. Not a whole lot of room to the downside. I only had 4 days left in those, and was really going to try and milk those out. But with the broader markets just getting crushed, I decided Honeywell had been fighting that good battle where the overall equities were down on the day, and Honeywell was managing to scratch and claw for some profits, or at least a positive day. And that was just, getting a little overdone. The broader market's just getting crushed. I knew Honeywell was going to go down as well. I still have on some other trades like the TLT trade and a couple other ones that aren't working out where I was buying premium when we had really low implied volatility. Those trades aren't working out. I'm going to let those expire. I'm not going to even mess around with those despite the fact that I'm directionally wrong on them. They pretty much expired, worthless at this point. So I'm just going to let them ride out for the remainder of the expiration, just on the off chance something crazy happens. There's no sense of covering these things for like a nickel and getting out too early. So I'm just going to let those ride. That's about all I got for you guys today. Thursday's webinar went off really good. We've got 2 going on this week. I'm going to be doing one that is the normal sequence in our weekly webinars, but I'm also doing a special one with another group that is going to be on Thursday also. So they're almost going to be back to back. So check it out if you want to do a crunch course on options. Thursday is the day to do that. So check us out at protraderstrategies.com and sign up for those. All right, that's all I got for you guys. If you can't take that,